It's been a volatile year. We're going to discuss a few things here today that will give you a little bit more of an edge to keep yourself safe in volatile market conditions. The market did change going into this year. Things are different. Volatility is high. That means liquidity has dried up and ranges expand, guys. Let's give them a few tips here on how to trade volatile markets.
Absolutely. And you've heard us talk about something on the show. It's like, oh, I like this price area. I got an area stop. I'm going to go manually on this trade. Watch how it trades when it gets to this price. In a more volatile market, sometimes have a stop. Yep. And if you don't use stop orders, then understand that there are definite places where you need to have them in there, and especially at very, very key price areas. I'm going to show you one on Twitter, right? Because the better trade on Twitter was the long breakout, but I did like the short. And again, it had failed at 55. It's got nice volatility. I'll pull it up so you can see the real volatility. The gap up on Twitter, huge movement, but see this top that it made at 51.5 on the first day when it made the gap up? It then turned into support just below that at 50.60 right here. So when it pulled back 50.50, I said, that's a failed break at the high. I love that short. I'm going to short in front of that level. But look at what can't happen. It cannot even take out the first level of support, 49.50. Kept going down there. You're scalping some out. But when it gets to this price, it is jailbreak from this level. It doesn't think about what it wants to do when it breaks the previous day's low in the afternoon. It just screams to the upside. Now, you don't have to reverse the trade. I reversed it there at that level. But if you don't stop out there, all you're going to do if you go manual and say, how is it going to trade around that area? In a 15-minute chart, like the second candle, it goes $1.30. If you're thinking about how it trades when it breaches that price level, all you're doing is throwing away extra money. It's a key price. It got breached. You get out. You don't have to reverse it. But sometimes stops in a volatile market are going to save your butt.
All right, yeah. I'm going to do a little bit more, macro style here. And I feel like in volatile markets, the one thing that you don't want to do, and again, it's going to be based on your own risk, parameters and how you're feeling. But why are you holding anything overnight? I feel like that is also another problem where a lot of traders, they see major moves here. And I'm just going to call Rivian up for an example. Like if you went long on this day here because you're like, uh-oh, we're back, baby. We're going to test the 50 period. The next day, I'm thinking it's going to go higher. And then you have one. Maybe you don't get out the next day, but then all of a sudden, you just start ticking lower. And remember, this is volatile market. So I really feel like that tip of not holding overnight can really save a lot of accounts. And I'm not talking about, the Longeverons or some of these kind of like meme stocks. I'm talking about trying to make plays. And another one, what about AMD here on a daily chart? Again, it's like when you have volatile markets, the best thing really to do is to wait until you get some of these tops and or bottoms, because then you can participate in these upside moves. If we know the market is volatile, then why exactly? And again, it's not really cherry picking. The markets have been volatile for a while, but it's like, why are you buying AMD in here? Like 110, 114, 115, when you're probably not getting out if it makes moves all the way to the top because you're like, okay, I have the bottom and you want this thing to retrace higher. But again, a lot of us will hold until these ultimate bottoms break. So in a volatile market, guess what? Those bottoms are more likely to break than at any other time. So I watch out for that. And then not only that, another thing to watch out for too is, we're going to talk about 3 tips, and that is sometimes you get what we call a bear market rally. And it doesn't mean it's going to last forever, but you see a downward move here, and then obviously a huge move to the backside because there's a lot of traders caught off guard being short. So now you get that move right back to these levels here on the NASDAQ, and now you're seeing a fade back in. So kind of the same thing I want to talk about for your index positions. You don't need to put on tons of risk to make money. It's better to wait for levels and don't get caught in some of these bear market traps back to the upside. So a couple tips there for volatile markets.
That leads me to a fourth. We'll do a bonus round. Why not, guys? And that is very simply size down. Use less shares. If you're not comfortable, you have too many shares. Just use less. It's very simple to say that, but it's very hard when you consider what we came out of into what these markets are today. So great tips there on how to trade more volatile markets.